As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. Absolutely, it is 9/28, 2024. Absolutely, it is. It is a super Saturday, as my great auntie would say, God rest her soul, my grandmother's sister. All right. And what I want to do is look at gold first because I want to go over the trades that we were able to take on gold. All right. Trades that we were able to take on gold. So, first of all, before I even get started, let me wait about a few minutes or a few seconds to a few minutes to see if people are going to hop on and join the live. So about a few minutes. Let's see what's up. All right, all right. So we're a few minutes in. Hopefully somebody will join. If not, they can go back and watch the YouTube live. What's up with the IG? So with the IG. It's yours. It's YT on YT. Yours truly on YouTube. All right. So what I wanted to do is go ahead and get into this. Okay. Uh, this is a trade. This is a gold trade that I am actively in. I am currently holding over the weekend. Um, I would have liked me just being over an overachiever. I would have liked a better sniper entry. But that's just me being an overachiever. But nevertheless, you can see how we're in profit. Entry, stop loss, TP is to this unmitigated 15-minute supply zone. All right. Now here's the deal. You see that I have listed right here are Wyckoff events, Wyckoff abbreviation events. Uh, it's listed on my 1 hour time frame, okay, because it's green. So this right here being a preliminary supply, this right here being the buying climax, automatic reaction, secondary test, minor sign of weakness, goes up, breaks the structure, creates a new high, which is upthrust. Now here's the deal. This right here is creating an entire bearish divergence, which is also known as a Wyckoff distribution cycle. Okay. Now what I want to do is place your eyes on this and see, in your imagination, see how I have this planned out, and I'm gonna pull up an image, right? So I want to pull up this image. I want to pull up this image. Shout out to the person that's on live with me. That's what's up. That's what's up with it. So what we want to do is stop sharing, share screen. And we want to share. Let's see, window. Here we go. Here we go. All right. So what I want you to do is be able to look at this Wyckoff phase, right? Now we're looking at a distribution, okay? So you can see the preliminary supply right here. Market goes down, goes up, creates, excuse me, the buying climax. You have the automatic reaction. You have the secondary test. You have the minor sign of weakness. Then the market does what? Breaks the old high of the buying climax and creates a new high, which is up thrust. Now here's the deal. We still don't know, or probably right now we already know that the market at some point in time will create a type 3. Type 3 is not listed on here. And what I feel and what I realized when the market print a type 3 distribution cycle is that the market will create the upthrust, and the upthrust will lead to the change of character. The upthrust would it would not respect this demand zone of the sign of weakness. The market will create this high. This high will lead to a change of character. So the divergence is between the buying climax and the upthrust. Imagine a line at the top slanting from the buying climax to the upthrust. That'll be slanting upward, and on the RSI will be slanting lower. Okay, that'll be a bearish divergence. The change of character is when the market fails to respect the last accumulation area or demand zone that caused the break of structure, which is this. This is the last low that broke this whole high, created this new high. The market comes back down, and if it decides to change character, will it change the character? That's what actually happened and printed on the actual H1 time frame on gold. Okay, so but other than that, if it doesn't print a type 3 schematic, it print either this type 1 right here on the screen, which the market will respect as demand zone, the sign of weakness, go up, create another high, break structure, create the U-Tat test, and then start the downtrend. Or the market would respect the sign of weakness, the demand zone, the sign of weakness, come back to the upthrust, respect that supply zone, be the last one to supply, and then start to sell to the downside. All right. So here's the deal. You see this buying climax, which is the BC. AR is the automatic reaction. ST with the secondary test, breaks the low, then creates a sign of weakness. This is a W between the buying climax, automatic reaction, secondary test, sign of weakness, and the upthrust. Now watch when we go back to look at the H1 on gold and see how strikingly similar and identical that these elements are looking. Okay? Watch how similar they look. Right here, you have the preliminary supply. Talking about breaking this high. Right here, creating a buying climax, automatic reaction, secondary test, minus sign of weakness, and then breaking the buzz high, creating an upthrust. Now, but the market has done what? Like I said, the upthrust has done what? Pushed down, created a distribution. This is a redistribution, this whole entire deal right here. All right. And then the market did what? Broke this low, decided to do what? Cause a change of character and create this low. Now, guess what? This is what the market has to do. Okay. The market has to at least minimum come back to this supply zone. Minimum. The market does not have to come back to where I have my TP set at, which is this this M15 supply zone. This M15 supply zone is unmitigated for a reason. Excuse me. We need to be able to read the details of the story. Okay. So I know that the market would at least come back to this minimum. I just always put my TP at the largest or the longest rate. I don't ever put my ending TP. I don't ever put my ending TP. If I have multiple take profits, I always put my TP at the highest number, or the or a TP2 or a TP3. Okay, if I have multiple TPs, I always put my TP at the latest TP. And then what I'll do, I only take partials once. When price hit TP1, I take partials. I remove 50% of my volume. My stop loss goes to break even, and I let the rest of that trade play out on the zone. Whether it's going to overall hit the rest of my remaining TP, or the overall TP, or it's going to do what? Turn around and go break even the remaining volume. So at least minimum, the market is going to come to here and may respect the supply zone and do what? Give us sales and sell to the downside, or go past the supply zone, create a reaccumulation, go up here to this M15 unmitigated supply zone. You see that unmitigation right here, and then give us the future distribution for the sell-off right there. Now here's the deal. Here's the deal with this. All of this in between here, the orange, M5 time frame, the yellow, M1 time frame. Because I was attempting to get the smallest entry possible with the smallest risk possible and going for this TP. So here's the deal. I was on, I think this was Thursday. I was on Thursday with an individual for the first time. My bro now named CD. Boy named Charles. And when he came to tell me, came to share with me, I said, man, what's up with it, bro? Like, how you been doing? Yeah, man, gold been kicking my butt. I said, okay, don't worry. We're going to go over some stuff right now. I said, I'm about to open up your mind to how this market prints. So that particular day, it turned out to be not a 1 hour session, but a 4 hour session, right? Because we were just vibing so much. And so we ended up taking 4 trades, right? We ended up taking 4 trades, and all of them, neither one of them being a lesson. Okay. So right here was the sell. You can see this in between here. This says 1 minute OB. It was a sell right here first. Okay. So what I'm going to do is I'm going to explain the sell. I'm going to explain these trades and explain what we're looking for in gold, and then I will see if there are any questions, comments, or concerns. and see if anybody wants me to mark up any other pairs, and then we're gonna look at Bitcoin. All right. So first, here's the deal. We knew the market had created this low, had broke this low, a distribution, redistribution, breaks the old low, creates a new low. Okay. The market accumulated, reaccumulated at this high right here, distributed, redistributed, came back into some type of demand zone, accumulated, reaccumulated, broke this structure, create this high. Same thing, distribution, redistribution, back into the demand zone. Then accumulated, reaccumulated, broke this structure, created this high, right? Distributed, redistributed, came back down to this level, okay? Accumulated, reaccumulated, broke this structure, created this high. So now this became a M5 change of character, right here. That's why it's listed. This high right here broke it and caused a change of character, right? So now the market did what? Distributed, redistributed, came back, mitigated this 1 minute OB, pushed up off of it, accumulated, reaccumulated, okay? Finally did what? Had a breaking structure. So it confirmed that, hey, we're continuing the trend to the upside. A change of character does not determine a change of trend, but a break of structure shows continuation of a trend. But what we must not do as traders is be married to one bias, be married to one side. Oh, I'm looking for buys. Oh, I'm looking for sales. Now, because you say that, you have now programmed your mind to believe that, or to believe that you're absolutely right. Your psychology won't allow you to see the other side. If you say, hey, I'm looking for sales, then your psychology won't allow you to see the buy. You're going to miss out on the buy opportunity. Vice versa. If you say, oh, I'm looking for buys, then your psychology is going to miss out on the positive sell opportunity. Now, what you're saying is, if you're married to a bias, married to the buyers, or married to the sales, or married to the bulls and married to the bears, you're going to miss out on a trade opportunity, and you're assuming that you are correct and the market is wrong. No, the market is always right. What I need to do is have a sell bias and a buy bias based off of how the market prints, and then I take my execution. Okay, then I take my execution. Hey there, hey there. Hey, so the individuals that are on YouTube live with me, I don't know if you're a part of my free Telegram group and free Signals group, but in the description below this video is going to be the regulated broker that I use. Okay, there's going to be another link where the trading Telegram free community link. There's a trading Signals channel that's free. All you have to do is go to your app store or your Play Store, download Telegram, and simply click on the link and add yourself. And what I would do is this: introduce everybody in the family to you, and say, hey, let's give a warm welcome to John and Jane Doe, who's embarking on their journey with us to becoming a consistent, profitable trader. And you're going to have people that's in the family say, hey, welcome, welcome, welcome. How are you? You know, you're going to have that. Okay. You're going to have that. And then what you're going to have as well, I do 5 to 6 live recorded Zoom calls, and I place them in the Telegram chat. I do not generate a penny or a dime from this. I have over 85 members in this chat. I have over 102 subscribers on YouTube, giving free value, and I can help anyone from any level, beginner, intermediate, or advanced, understand how these markets print without any indicators. It's all up here. It's all up here. The indicators are fine, cool, nice, and dandy. They cute, but when you understand how a market prints from up here, oh my goodness, it's just the candlesticks just print in front of your face. So here's the deal: when I say understand how a market prints, I'm not talking about market structure. I'm talking about where the bulls can show up at and where the bears can show up at. Where the bulls can appear and where the bears can appear. That's what I'm talking about. And I say, hey, you know how a market prints? When I ask somebody that question, they say, oh, you know, or they may say higher highs and higher lows. No, that's an uptrend. Do you know when the bears and when the bulls are supposed to show up? No, okay. I mean, I'm not trying to shame you, but you don't know how a market prints. That's just a simple fact. When you understand that simple fact, okay, cool, bet. So now what I'm about to do is go over on the M1 time frame how me and Charles, he just joined the chat Thursday, and it's a 4-hour video. And obviously you could pause, fast forward, and rewind it if you're in the chat. Show how we actually absolutely took 4 trades together and was able to profit off every last one of them and did not take a lesson. We don't lose, we only take lessons because we learn from them. Now, here's the deal. I don't even get dreaded about my stop loss getting hit anymore because I understand why I got hit. That's another thing. When people stop losses get hit, they don't understand why it got hit. When you understand that, you're like, oh, okay, cool. That's dirt under the rug now. Boom, next trade. That's the mentality you need to have. Okay? And I'm going to help you adopt that mentality. I promise you, if you just choose to stick with me, I'll help you adopt the mentality. I have a passion for educating people on this stuff. So here's the deal. For the sale, let me go to the monthly because some people may be new on here. Let me draw this out first. I want to draw something out first before I explain that 1 minute time frame. Okay? So here's the deal. It won't be the first time I explain this. It won't be the last. All right? So we know that on the uptrend, the market creates a low, high, higher low, higher high. Correct? Okay, now here's the deal. You need to understand the market price cycles. Orlando, what do you mean by that, man? The market prints in market price cycles. There are only 4 market price cycles, and the market does not print these cycles out of order. It doesn't skip the order or anything like that. It doesn't skip cycles. Market price cycles. What are they, Orlando? Okay, here's the deal. This is what they are. Say you the shoe plug, right? Jordans, hot selling, hot commodity, right? Say you the shoe plug and you found some Jordans at Wally World. You found some Jordans at Walmart for the low on clearance, right? And these are the real deals. What you're going to do is you're going to buy all those Jordans at that discounted price. That's called the accumulation level. That's the accumulation cycle. You're accumulating. Okay, that's the accumulation store. Now, once you're done accumulating at that accumulation store, the market would do what? This will be a bullish divergence followed by a change of character. Okay, a bullish divergence followed by a bullish change of character is also known as an accumulation cycle. Okay, so the market would accumulate at this level and then go up, right? And then what will happen right here after the accumulation, the market will do what? It'll make a pit stop at the reaccumulation. Okay. Now, the reason why the market will reaccumulate is because sellers have joined in the market and now they duking it out in the ring. So here's the deal. You got right here at this level, you got buyers and sellers duking it out at the accumulation level. Boom. The bulls knocked out the bears, dropped them to the ground. Boom. Made an imbalance, expanded up. Now the bears have gotten up before the 10 count. Now we at the reaccumulation store, right? They're duking it out again. Same thing, you the shoe plug. The value of the Jordans have increased, but they're still at an affordable discounted rate where you're the shoe plug to be able to buy them. Okay? Does that make sense? Let me know if I lose somebody. Give me a comment in the chat that you're following the scenario. Absolutely. Ellie, am I saying it right? Ellie? Yes. Because I need to explain it first in the illustration and draw it before I show you on the chart. Because if I just go right in, diving into the meat and the potatoes and showing you on the chart, you're not going to understand it and process it up here. Okay? You're not going to be able to understand it and process it up here. Now, here's the deal. This explanation not only works for gold, it works for any market that has candlesticks. Crypto, indices, stocks, Forex majors, Forex miners, futures, metals, NVIDIA, SPX 500, JER 30, US 30, Dirty Bird, Dirty, whatever pair that has candlesticks. Okay? The market prints like this all the time. Once you understand it, you'll be able to understand it. Okay? All right? So here's the deal. Now, here's the deal. Y'all can continue to comment, okay? Because I'll come back and look at the comments. Okay? So I want to make sure I'm not just blabbering and then you all get lost. Okay? So here's the deal. The market at the accumulation level. So right here, let's do this. Okay, market accumulates, you buy the Jordans. Cool, the value of the Jordans went up a little bit, but they're still at an affordable price where you're able to still do what? Purchase them and do what? Increase your supply. So cool, you stop at the reaccumulation store, you buying some more Jordans. And then bam, the market does what? At the reaccumulation. Now, reaccumulation is also going to be known as a bullish triangle. It's going to be some type of bullish triangle. Okay. Now, if you know about Elliott waves, there are 4 different versions of triangles. There are barrier triangles, expanding triangles, running triangles, and contracting triangles. Okay, so you have this bullish triangle is going to be a reaccumulation. The market is going to expand again. Now, the what? The value of the Jordans have reached a premium, right? It reached an area where, okay, cool. It reached a premium for you where you're not going to buy it now. You're going to do what? You're going to sell it and profit from the difference. Does that make sense? Does that make sense? At that high level, after the reaccumulation cycle, is going to be called a distribution cycle. You, the shoe plug, are no longer looking to buy and accumulate. Okay? Now that the value of the Jordans have went up and hit a premium, you're looking to profit from the difference. You're going to sell them more from what you bought them for at the accumulation and reaccumulation level. Does that make sense? You're going to profit from the difference. Let me know something before I continue. That makes sense? Okay, cool. Cool. So now we're at a distribution level. A distribution means I'm selling. Okay? I am now selling because the value of the Jordans have hit a premium. Everybody wants the shoe now. Everybody wants the Jordans at this level now. Okay, so I'm going to distribute and profit from the difference. So here's a distribution cycle. And then right here is going to be a what? After the distribution is going to be a redistribution. Okay, so the value of the Jordans have now decreased, but it's still at a high enough premium to the point where what? I'm not ready to buy and I can still profit from the difference. Does that make sense? It's not at a cheap enough discounted price for me to buy yet, but I can still profit from the difference even though the value is decreasing. Okay? That's what the redistribution cycle is. So guess what? We have 4 market price cycles. Accumulation, then the market goes up, it reaccumulates, and then it goes up again, then it hits a premium, it creates a distribution, which is a bearish divergence, followed by a change of character, which I'm going to show you on the candlesticks, and then you have a what? Redistribution. Now, what's the next market price cycle after a redistribution? The market then does what? It accumulates again. It prints the market price cycles all over. Okay? It prints the market price cycles all over. So right here, you're now doing what again? Let me see if somebody's paying attention in the comments. At this level right here, what market price cycle is this called? What market price cycle is this called? That I just highlighted. What market price cycle is that called? What market price cycle prints after a redistribution? There you go, Ellie. Great job, Ellie. Great job. I wish I had some like sound effects or balloons or something to put in the chat. And great job, great job. Accumulation. There you go, Ellie. There you go. So, Ellie, if you don't mind me asking, what is your level? What is your level or knowledge base of trading when it comes to trading? Are you beginner? Would you consider yourself a beginner, intermediate, or advanced? Would you consider yourself a beginner, Emmy? You trade price action. That's cool. Same here. But over 4 years. Okay, cool. Okay. Yeah. Okay. Okay. That's wonderful. That's what's up. That's what's up. So here's the deal. Now you must understand that, okay, the market is going to accumulate and reaccumulate, right? So my next question is this. What causes the market to create a bullish break of structure? Because right here is a bullish break of structure. What causes the market? What is the now the effect? The effect is a bullish break of structure. Okay, we're gonna solve all that. We're gonna solve all of that, okay? And hopefully you take advantage and do download Telegram and add yourself to the trading community and the trading signals chat that I provide. It's all free value. I just want to see traders succeed. All right. So here's the deal. What causes a bullish break of structure? The bullish break of structure is the effect. Okay. What is the cause? What is the cause? What causes a bullish break of structure? A bullish break of structure. A bullish break of structure is a old high broken and the market goes up and develops a new high. What causes the market on the screen? What caused it to create a bullish break of structure? What two things? That's the hint I'm gonna give you. What two things? And you gotta say it in order. You gotta say it in order. What two things caused a bullish break of structure? Yeah, that's half right, Ellie. Okay, accumulation. That's right. Accumulation got a discount price. That's right. I agree, but that's not the whole. That's just half. What causes a bullish break of structure internally before the break of structure happens? What is the cause? Something happens. The market prints two things before before the break of an old high. The market prints two things before the break of an old high, and those two things are the cause of a bullish break of structure. So, what causes a bullish break of structure? I agree with the accumulation, but it's something else as well. It's not only the accumulation. No. So look at the market price cycles. Let me bring my screen back in. Look at the market price cycles. Okay. Remember, we know the market does what? Accumulate, reaccumulate, distribute, redistribute. And then it starts all over again. Before the break of this high, right? What two market price cycles printed in order to create a bullish break of structure? What two market price cycles printed in order to create a bullish breaker structure? The bullish breaker structure is the effect. This is the result. What is the cause? Okay, Ellie, say it in order. Say it in order. Say it in order as how the market prints. There you go. Accumulation, reaccumulation is the root cause and the determining factor of why the market breaks an old high and creates a new one. Does that make sense? The market has to accumulate and reaccumulate, accumulate, reaccumulate, breaks the old high, creates a new one. Make sense? Does that make sense up here? Does that make sense up here? Okay, cool. So now we developed that. We understand that now. Okay, cool. So now guess what? What if the market does this? Now here's the deal. Let me type this out as well. I need to type this out over here. Okay. Question is, where can the bulls appear in the market? Man, where can the bulls appear in the market? There are three areas, okay, that the bulls can appear in the market. Bulls can appear off a accumulation, okay, which is also known as a bullish divergence, and followed by a change of character. Oops. Okay. Number two, a reaccumulation. Okay. Which is also known as a bullish triangle. Okay. Number three, where can the bulls appear? When the market creates a downtrend. No, excuse me. When the market creates a lower low in a downtrend. Okay, think about it. Okay, now the next question is this: where can the bears appear in the market? Okay, number one, you have a distribution, which is also known as a bearish divergence and change of character. And I'm going to show you all of these on the charts, okay? Don't worry. I got to type it out first so you will know. If I just speak it and you don't see it, your brain is not going to be able to process it. Write Habakkuk chapter 2, verse 2. Write the vision down and make it plain so he or she who sees it may run. Okay? Number two, a redistribution, which is also known as a what? A bearish triangle. Okay, and number three, the market creates a higher high in a uptrend. Then the bears got to come in. Okay, and I'm gonna leave that right here. Oops. All right, makes sense? Everybody got that? What's up, Muhammad? What's up with it, man? What's up? What's up? Everybody can see that purple font, or is it too small? I know it's too small right now, but I'm talking about when I zoom in like this. Everybody can see that. Everybody see that? Feel free to comment because I'm looking at the comments. Okay, cool. So now I'm gonna go over this stuff. Now here's the deal. Here's the deal. In this example, this uptrend, right? Low, and this is what market structure is. Market structure is the accumulation low, right? To the distribution high, to the accumulation low, to a distribution high. That's what market structure is. What you'll see is a bullish divergence and change of character. Okay. Then it will lead to a what? Bullish triangle, reaccumulation, right? Then the market will create what? A bearish divergence and change of character. And then it'll create what? A bearish triangle. Then it'll do what? A bullish divergence a bullish divergence and change of character, which is also known as accumulation. Reaccumulate, break structure, break the old high, create the new high. Now the bears have to come into the market. Does that make sense? Because here's the deal. This redistribution, this bearish triangle, before the market broke this old high and created this new high, the first opportunity the bears had to join the market was this redistribution, this bearish triangle right here. The sellers the market could have pushed up right here, and the sellers could have stopped it, and the market could have done what? The market could have reversed and went down. Okay, that's the first area of interest. So right here, if you would have gotten in for buys, oh, hold up, excuse me. Right here, if you would have gotten in for oh man, hold up. Right here, if you'd have gotten in at this accumulation level for a buy on a smaller time frame, your TP1 is the redistribution bearish triangle, because this is the first instance and the first contact that the bears can come into the market. You want to RTM, respect the market. Does that make sense? Well, in my opinion, the best broker is Sway. That is right now the number one leading regulated broker. The number one leading regulated broker. And if you want to link up with Sway, the link to that broker is going to be in the description below this video. Or if you can't see it in this video, go to one of my previous YouTube live training videos and you'll see the link in there. It'll be the first link. It'll be the first link. It'll say Sway. It'll say Sway. Okay. If you have any problems signing up, feel free to reach out to me. You know how to reach me. Okay. So does that make sense? If you would have got in for a buy at that accumulation level, okay, the TP1 would be that bearish triangle, which is that redistribution, because this is the first instance and first contact that the sellers can come in, that the bears can come in. Does that make sense? That makes sense? Okay, cool. So now guess what? If the sellers didn't come in right here, right? This would be TP1. Now here's the deal. Market smacks right here. You don't know if the seller's going to come in or not. What you want to do is take partials, take 50% of your volume off of the trade, put your stop loss at break even, and let the rest ride to what? An overall old high. Okay? Because some people will get in for a buy at this accumulation level and put their overall TP at the what? At the old high. Okay? And there's a reason for that. So right here would be TP1. TP2 will be what? This distribution level. This bearish divergence and change of character is an area of interest where the bears can come in and participate and push the market back down. Does that make sense? That's why that old high that distribution would be TP2. That'll be take profit number 2. Does that make sense? I'm telling y'all how to set y'all TPs. It's very, very simple. Okay, that is take profit number 2. Okay, that distribution where it's saying, hey, the market hasn't broke structure. It hasn't broken this old high and created a new high. The seller said, hey, we're going to stop you right here in your tracks, and you're not going to break this high. You are not going to break this high. So we're going to stop you at this supply zone, and you're going to sell from here. Okay? That's what the bears are saying. Okay, this is the next area of interest where the sellers can come participate in the market at. But guess what? If the seller didn't want to come and participate in here, what would the bulls do? Boom, create a breaker structure, right? So now here's the deal. The market has accumulated, went up. The bears didn't come in off of this bearish triangle. It reaccumulated. The bears didn't come in off of this supply zone, this bearish divergence and change of character. The market created a breaker structure, a bullish breaker structure. Now, who has to come into the market? After the market has created a bullish breaker structure, who has to come into the market? Who has to come into the market? If the market has created a bullish break of structure, who has to come into the market? I'm going to have y'all pro trend or counter trend trading, because you will have an idea and know when and where the bears and the bulls can show up. So you never miss out on a trade. You never miss out on a trade, and you don't be married to a bias to being, I'm looking for buys, I'm looking for sales. Your mindset needs to come to the chart and say, okay, if this were to happen, I will go for a buy. If this were to happen, I'm looking for a sale. So now my question is this. There you go, Ellie. The bears have to appear. The bears have to appear. Why? Because the market accumulated, reaccumulated, broke an old high, created a new high. So if the market accumulated, reaccumulated, what's the next market price cycle that has to print? What's the next market price cycle that prints after a reaccumulation? What is the next market price cycle that prints after a reaccumulation? What is the next market price cycle that prints after a reaccumulation? A distribution. There you go, Ellie. A distribution, right? A distribution. So guess what? Now I'm going to draw this. Oh, let me also put this. I'm going to put this after I draw it. After I draw it, I'll put it. So here's the deal. Now say the market did this. Say the market did that. What just happened? Oh, man, you threw me for a loop. What just happened, Orlando? I'm going to show you. The market distributed. The market created a distribution. This right here, reaccumulation, was the first area of interest for the bulls to come in. So if you sold from right here, this would have been your TP1. Does that make sense? That reaccumulation? Absolutely. Absolutely. That would be next. That would be next, Ellie. So if you sold at that distribution, your TP1 would have been what? The reaccumulation. Because that's the first area of interest. The buyers, that's the first area of an opportunity that the buyers have to get into the market. That's the first opportunity the buyers have in order to push the market back up. So that would have been your TP1 if you'd have sold at the distribution. Okay. Now, if the reaccumulation fails, cool. What has to print? A redistribution, right? A redistribution has to print. So guess what? What we have? A bearish triangle, right? Which is also known as a redistribution cycle. So now you have a distribution, redistribution. Guess what? This level right here, this old accumulation, this was an area of interest where the buyers could have came in and participated at. This is area of interest number 2. The first area of interest was the reaccumulation. Okay, the second area was what? this accumulation right here. But the market broke through that, right? The market broke through that. So guess what? What is this called? This is now called a change of character. This is now called a change of character. Now, here's the deal what a lot of people don't understand. I'm about to type this out. A change of character does not determine a change of trend. A change of character does not determine a change of trend. Just because this distribution, redistribution broke this old accumulation and came lower, that does not mean the trend has changed. Okay? A lot of people get caught slipping because of that. They get caught slipping. Oh man, you know what? Oh man, guess what? You know what a lot of people do? Y'all about to laugh now. So let me say this. A change of character does not determine a change of trend, but a break of structure shows continuation of a trend. Does that make sense? A change of character does not determine a change of trend, but a break of structure shows continuation of a trend. Does that make sense? Let me know something. Let me know something before I continue. Now, here's the deal. Why is that called a change of character? Because look, the market created a low, high, higher low, higher high. In an uptrend, right? In an uptrend, the higher low is not supposed to be broken. The higher low is not supposed to be broken. And it got broke. The first higher low that's broken in the uptrend is called the change of character. Okay? The first higher low, which is the first higher low, which is also known as the accumulation, which is also known as a bullish divergence and change of character, the very first higher low that's broken and not respected and disrespected is called the change of character. Okay, so the market changed character right here, right? But a change of character does not determine a change of trend, but a break of structure shows continuation of a trend. So here's the deal. Why do people do this? Oh, the market has changed character. We're going to go ahead and sell right here. The market broke this old low, right? With this move to the downside, we're going to go ahead and sell, and then your stop loss way the hell up here. What sense do this make? No, not necessarily, Ellie. I'm about to show you. Why would people, what causes a bearish change of character? What two market price cycles print in order for that higher low to get broken? In order for that change of character to happen, the bearish change of character to happen, what two market price cycles printed in order for that bearish change of character to happen? What is the cause? What caused a bearish change of character to happen? The bearish change of character is the effect. It's the result. What is the cause? What is the cause? What two market price cycles printed in order to create a bearish change of character below? And say them in order. Say the price cycles in order. So what two market price cycles? That's not first. That's incorrect. It's incorrect, Ellie. Say them in order. So what two market price cycles caused a bearish change of character below? What two market price cycles caused that higher low to be broken? Excuse me. You're not wrong about the redistribution, but that doesn't show up first. There you go. Distribution, then redistribution. Why? Because here's the deal. The distribution is up here. It got printed. The bearish divergence and change of character. Then the market redistributed. Then it caused a what? Bearish change of character. So guess what? If you telling me, Orlando, if you telling me that the cause of a bearish change of character is a distribution and redistribution cycle, why are people looking to sell after a bearish change of character has been printed if a distribution and redistribution causes it? Because they don't understand how a market prints. That's why. They don't understand how a market prints. So, what would your mind tell you to look for if a distribution redistribution causes a bearish change of character? What would your mindset be looking for? What would you be looking for now? What would you be looking for to do? If the distribution redistribution causes a bearish change of character, what would you be looking to do next? What would you be looking to do next? Exactly. So why do you see why do people sit up here and do this? I don't understand. I do understand. They don't understand the market print, but don't sit up here and sell after the market created a bearish change of character. They're gonna sit up here and sell. The stop loss is gonna be way up here. You already missed the sell. The market distributed and redistributed in order to cause the bearish change of character. So why are you selling? Why? So guess what? The market does what? Respect this what? Imbalance right here, this accumulation low right here, and does what? Oh, you want to know what? We're going to do this. We're going to do this right here. Now what do you have? The market just did what? Broke structure. What caused this break of structure to happen? What caused that break of structure to happen? You had the market do what? Accumulate, reaccumulate, broke this old high and create a new one. Does this all make sense? Does this all make sense? And what did I just draw right there? I just drew a harmonic pattern. The market is going to print in a big, gigantic M or W. Yes, that absolutely can happen. That's why you wait on confirmations and don't place pending orders. That's why you don't place pending orders. You automatically become the market's liquidity. What is liquidity? The market absorbed your order and used it for fuel. So guess what? That change of character area, people had their stop loss orders. People had their stop losses sitting right below that accumulation level, that higher low in the market, because they assumed, they made the assumption that the market was going to buy from right here. They made that assumption. So guess what? They say, you know what? We're going to put a buy limit right here. Stop loss right here. TP at the next high. And we're gonna assume that the market gonna respect this area. They put that pending order there. Now guess what? Their stop loss order just got hit with this distribution, redistribution. Boom. It became the liquidity. It became the fuel to do what? Fuel this move from right here. The market was not at the market was not at a discounted price, a cheap price enough for the buyers to come in. It wasn't at an affordable price. It was still at a pretty much expensive price at this level. That's why the buyers didn't come in yet, because it wasn't cheap enough. It wasn't cheap enough. Does that make sense? So now, guess what? We're going to leave this illustration right here, and let's go to the chart. Let's go to the chart. Let's go to the M1 time frame. Now, here's the deal. Back here, where we at? Right here. Let me show you something on the M1 time frame. Right here, you can see how the market is slanting upward right here on the candlesticks. And in the same exact area on the RSI is going to be doing what? Slanting downward. This is what you call a bearish divergence. And then the market decided to do what? Change character right here. Because this is the last accumulation level that did what? Accumulated, reaccumulated, broke this structure, created this new high. The market came back down, distributed, redistributed, didn't respect this demand zone, didn't respect this demand zone. So it changed character right here. Does that make sense? Make sense? Y'all following me? Before I continue? Ran out of drink. Follow me before I continue? So here's the deal. Here's something that the market always leaves us clues, right? So here's a clue that the market left right there in that particular area, right? Here's the clue that it left. All right. Here's a clue that it left. The market diverged and changed character, right? This became the change of character area. Okay. Now look, you see how the market slanted upper right here, slanted lower on the RSI, the change of character area. Now here's the deal. What caused the market to create a bearish change of character? A distribution, redistribution, right? You can see the bearish triangle, right? See the bearish triangle? Now see that? I'm about to show y'all something. I'm about to blow y'all mind. If nobody's never heard this, I'm about to blow y'all mind. Watch this. Here's the deal. The market created a bearish divergence and change of character, and it left this supply zone unmitigated, which means it's untouched. It left the supply zone open, right? Now, here's the deal. If the market truly wanted to go bearish, after the market changed character, the market would have came back to the supply zone that caused the change of character, created a lower high, and then turned around and done what? Distributed, redistributed, broke this old low, and created a new low. If the market truly wanted to go bearish, okay, it wouldn't leave a supply zone unmitigated, let alone it wouldn't have left two supply zones unmitigated. What do I mean by that? So when the market diverged and changed character, you see this supply zone is unmitigated, is open. But now the fact that the market distributed, it caused a change of character, and then it did what? Created this redistribution, and it created another imbalance. So now you got not only one supply zone is unmitigated, you got two supply zones is unmitigated, because the market created left a supply zone open right here, and it left a supply zone open after this redistribution cycle, and it printed lower again. So guess what? You knew that the market had to go bullish because you have no supply zones mitigated going into what? A demand zone, which is right here. So now you see the accumulation, which is where? Right here. You see the market doing what? Bullish divergence. And there's your change of character right here. So that's your what? Accumulation. Here's your distribution, redistribution, accumulation, reaccumulation. Market break structure creates a new high. Isn't that awesome? Isn't that awesome? Does that make sense? Does that make sense? So now let's go over the trades that were taken. Let's go over the trades that, like I said, I was on Thursday with somebody for the first time, and I blew their mind just trading on the M1 time frame. Okay, absolutely tradable. So here's the deal: we came right here. The market created a low, broke this old low, created a new low. So the bulls got to come in, right? So what causes this old low to be broken? A distribution, redistribution, breaks the old low, creates a new low. The bulls got to come in the market. All right. But so ultimately we led to a what? M5 bullish change of character, right? So the market changed character right here, came back, did what? The market took out this low right here with this wick, right? So what caused this low to be taken out? A distribution, redistribution, causes the breaks the old low, creates a new low. Now the bulls got to come in, accumulate, reaccumulate, break a structure, create a high. Now here's the deal. Right here, we were able to take sales. You can see the sell entry right here. Okay, we were able to take a sell. So this is what we did. We seen this reaccumulation right here. The market created this high, came back. This is an area of interest where the bulls can appear. The bulls appeared. So guess what? Also for your notes, write this down. A higher low, its primary purpose is to break an old high and create a new one. If a market is going to be a true higher low, its primary purpose is to come off of a accumulation or reaccumulation level, break an old high and create a new one. Okay? But not all the time that's going to happen. A lower high, its purpose in the market is to do what? Break the old low and create a new low. That's its primary purpose. Now we know at times there's going to be an opportunity where the lower high is not going to be able to do what? Break the old low and create a new low in a downtrend. Okay? So then we need to put our antennas on and be able to realize that, hey, the opposite is about to happen. Okay? So right here in this instance, the higher low came off of a reaccumulation. Its job right here is supposed to do what? Break above the old high and create a new one. But here's what happened. The market created a low. Internally, substructure created this high, came back and smacked the demand zone, right? Created a higher low. Boom. Internally, broke the structure, created a high. So now that we have internally, we have a what? Bullish breaker structure. We have a bullish breaker structure internally. Absolutely. Ellie, this works on any time frame, even the second time frame. You just got to understand where you are in the market based off the time frame. You got to understand where you are in the market based off the time frame. Every single time frame acts as its own market. So you got 9 time frames to choose from. You got the monthly, weekly, daily, H4, H1, M30, M15, M5, M1. All the markets act as their own market. Because you got trends within side of trends, within side of trends, within side of trends, within side of trends. Okay? Act as their own market. But just because overall the monthly time frame is bullish does not mean we cannot take sales on a different time frame. Or just because the overall monthly is bearish does not mean we can't take buys on a smaller time frame. That is trader preference. It's trader preference. Okay. So here's the deal. We're going to go through it. This low right here, right? Its primary purpose was to do what? Break this old high and create a new one. But that didn't happen, right? So now I have to switch and say, okay, cool. I can see that the bears are about to come in this market. So here's the deal. Here's a low. Here's a high. Here's a higher low. Break a structure. Internally higher high. So guess what? You've taken what? What caused internally? What caused this high to be broken? A lower time frame, accumulation, reaccumulation, breaks this old high, creates a new one. Now, who needs to come into the market? Who needs to come into the market? On that particular time frame right there, who needs to come into the market? I have internal substructure. The market has broken a high and created a new one. Who need to come into the market? The sellers. The sellers. So look and see what happened. Look at what happened. This is how you read the market. Okay, I can see that the market respected some type of demand zone right here, right? The market respected some type of demand zone right here. Created what? A higher low. You got a low. You got a high. You got a higher low. Accumulation, reaccumulation. Break structure, creates a high. Guess what? Now I'm in a supply zone that's unmitigated. I know the bears need to come in. Boom, what happened? Sell down, distribute, redistribute, and do what? Oh, it didn't break the low yet, right? This low right here did not break this old low. So guess what? We are not officially bearish. Okay? So guess what? What did the market do? Come right here, equal out, accumulate, reaccumulate, come back to this supply zone and do what? Created this high right here. And guess what? The sellers came in, boom, broke past that. We did a sell market execution. And guess what? The market did what? Distributed, redistributed, broke this low, created a new low. Guess who got to come back in the market? Now that an old low is broken and a new low has been created, the bulls got to come back into the market. Accumulate, reaccumulate, smack this supply zone, right? Create this high, distribute, redistribute, break this low, create a new low. That's how we was able to sell. It was too simple. Now here's the deal. The overall TP was sitting right here, right? And I could have been reaching for this one, right? I could have, but I was showing Charles, that's the person I was on with. I was showing him how you would be able to trade, right? So this is a reaccumulation, right? This is a reaccumulation. So this right here is an area of interest where the buyers can come back in and participate in this market. So guess what? I wanted to RTM, right? I wanted to RTM, which means respect the market. I wanted to respect the market. So guess what? I did that. I did just that. And I put my overall TP right here where the reaccumulation was at. Obviously, the market did what? Sold all the way down here. So guess what? The market broke this low, right? The market accumulated, reaccumulated, stopped right here, did what? Distributed, redistributed, broke this low, created a new low. Now who got to come into the market? The bulls. Accumulation, reaccumulation causes a what? Bullish change of character. I've seen this as an entire reaccumulation, right? So guess what? What did the market do right here? The market, okay, accumulated, reaccumulated, broke this old high, created this high. The market distributed, redistributed. Okay, cool. Accumulated, reaccumulated, broke this high, created a new one. Now the bears got to come into the market. Here's the bears, right? Distribution, redistribution, broke this low. All right. Ultimately created this low. This low did what? Accumulated, reaccumulated, created this high. Then this high led to what? Distribution, redistribution, a break of this low that I got circled and created a new low. So now that you know that what? This stuff is golden. Now that you know that this low has been broken, an old low has been broken, and a new low has been created in a downtrend. Who needs to come into the market now? If an old low in a downtrend, if an old lower low has been broken and a new lower low has been formed, who has to come into the market? If a distribution redistribution breaks an old low and creates a new low, who got to come into the market now? Who got to come into the market? The buyers. So that's why the market did what? That's why the market, when this old low was broken, created a new low, smacked this accumulation level. That's why the buyers came in, accumulated, reaccumulated, broke this structure, and did what? Continued to go up. This right here, a reaccumulation. Reaccumulation. And guess what? We were steady layering in buys. Steady layering in buys. Now here's the deal. Why did the market choose, or not choose, or why did the market sell from where it sold from? Why did the market sell from here? What I call LTTL, which is look to the left. LTTL, which is look to the left. Okay, right here, we have a what? We have a M5 redistribution. We got a distribution, redistribution, right? And then this right here, this entire thing right here is the accumulation. So guess what? We had a M5 redistribution imbalance right here. That's why the market sold from right here. Does that make sense? You could literally ping pong this market. When you know where the bulls can show up at and where the bears can show up at. Literally ping pong this market. This was a good sell because this is a redistribution. This is an area of interest where the sellers can participate in the market. And the market started doing what? Selling. It did a distribution right here on the M1 time frame. This is a bearish divergence and a change of character. Now here's the deal. In that particular area, you can see on the M1, and I'm gonna pull up the RSI, how the market is literally doing what? Slanting upward right here, and it'll be slanting lower on the RSI. Look at it. Which makes this what? This area the change of character. Now guess what? What happened? After the market changed character right here, did the market come back and smack the supply zone that caused a change of character? Or created a redistribution that continued to go down? The market did not come back to mitigate or touch the supply zone after the change of character happened. The market decided to do what? Created a what? A redistribution. So here's the deal. This redistribution stretched all the way to here, to be honest with you. It's a big, gigantic redistribution. Okay? That's exactly what it is. It's a big, now here's the deal. You could, now as this big, gigantic redistribution was printing, could you have taken it for buys and sells while it was cooking? Absolutely, 100%. Absolutely. Absolutely. 100%. All right. So this turned out just to be a big, gigantic redistribution. Okay. And so now we left this supply zone imbalance. Now we got a what? Imbalance supply zone coming from there, going down. So guess what? Now that we have what? A distribution, redistribution. What's the next market price cycle that has to print? Is the accumulation. And so check this out. That's why you have this landing lower like this, right? And on the RSI is going to be slanting upward because now the accumulation has to print. Look at it. Does that make sense? Now, what has price done? Diverged and created what? A change of character. A bullish change of character. Makes sense? Now, what causes a bullish change of character? Internally, the market did what? Accumulated, reaccumulated, caused a bullish change of character. That makes sense? So now here's the deal. What I must be cognizant of, yes, I'm in profit. This is my actual entry, it's my actual stop loss, and my TP is up here to the supply zone because that M15 is imbalanced. But guess what? Where's the first opportunity for the sellers to participate in? This redistribution right here that we have marked off, this whole entire redistribution. So I can go to like the M30 or the H1 and I can see this imbalance right here, right? So this area right here is going to be TP1, is going to be an area where I take partials at, okay? I'm going to close 50% partials right here. My stop loss is going to be at break even, and I'm going to let the rest ride to the overall 26.8173 area. Me personally, I never completely take myself out the market. I just pay myself from the market. I never completely take myself out the market. I just pay myself from the market, because how many times have we been in a trade where we completely took ourselves out of the trade and it went our way? You working against yourself at that point. You need to take partial system. Okay. Number two, how would you know if your setup is going to play out or not? If you're going to consider yourself a professional trader, how are you going to know if it's going to play out or not? You need to document this stuff. You need to journal this stuff. You're going to take it seriously. And you're going to actually use the skill set of trading to be able to flourish your dreams. Okay. Let's see again. Also, what's the point of putting a stop loss price and a take profit price in our active trades if we're going to manually close ourselves out of our entire position? The reason why you put a take profit price and a stop loss price, because you're telling the system, hey, I am not going to be able to screen watch all day. If the market were to ever hit one of these two price numbers, take me completely out the trade. That's the point of putting that. Not putting a take profit and a stop loss and you don't let the trade play out and you're going to completely close yourself out of the trade. That defeats the purpose of putting a take profit and a stop loss. If you're going to completely close yourself out of the trade, don't worry about putting a take profit or a stop loss price. It defeats the purpose. What's the point if you're going to completely close yourself out? If you're going to be the one that's completely taking yourself out the market, why put those two price numbers? You putting those because you're not going to be able to screen watch all day. And you're letting the system know, take me out the trade if it hits one of these prices. Okay. So now, like I said, area of interest right here for the sellers to come back in and participate. That's going to be an area where I take partials, because here's the deal. The market has to go to this level minimum before the sellers participate. It doesn't have to go way up here. That's just where I wanted to go. So on the H1 time frame on gold, what do we have? We have the market balancing out right here and causing a what? A break of structure. Right? What causes a break of structure? Reaccumulation. Right here, we have a reaccumulation. So if this is a reaccumulation, what's the next market price cycle that needs to print? Is a what? Distribution. So that's why right here to here, you have the market slanting upward right here. And then you have the market doing what? Slanting lower or equal highs on the RSI. That's a hidden divergence. And then the market has already done what? Distributed, redistributed, and done what? Caused a change of character. So now here's the deal. When the market distributes, redistributes, and causes a change of character, one or two things can happen. The market can come back to the supply zone that's imbalanced, right? Create a lower high on the redistribution, or create that lower high on the distribution, which is right here, and then turn around and do what? Distribute, redistribute, break this old low right here, and create a new low. Those things are possible. All right. Or the market can decide to do what? Change character, create a redistribution, and then do what? continue to sell down into what? This reaccumulation, where this is an area of interest where the buyers can participate, where the buyers have the opportunity to participate in the market again. But now that the market created this divergence or change of character right here, it's going to either sell off of this redistribution or it's going to sell off of this distribution. What I want it to do is sell off of this distribution so we can have a nice sale. And guess what? We can go down. We can get in for a distribution right here for a sale. Stop loss nice and tight on the lower time frame. And then guess what? Our TP can be what? At this old low. Because now the market has done what? If I'm looking at market structure, the market has done what? Create this high right here. Market has created this high and then created this low. So if it wants to be a downtrend, hey, come off of this H1 right here, supply zone, create a lower high, go down here, probably create a lower low, or pull back to this what? M15 supply zone, create your lower high, and then do what? Accumulate, reaccumulate, come back up here, distribute, redistribute, break the old low, create a new low. TP1, one of my TPs, like I said, my overall TP on the screen is always going to be my furthest TP price. But the first area of interest that the buyers have the opportunity to participate in the market is going to be a take partial. And then I will let the rest ride to my overall take profit. So if I get in for a sale up here, that first reaccumulation, which is the area of interest where the buyers have the opportunity to come back and participate in the market, is going to be TP1. I'm going to close 50% partials. Stop loss going to go to break even. And then I'll let the rest ride to my overall TP, being the break of this low or this reaccumulation demand zone. All right. So how do you, about to sign off, about to conclude the session. How do y'all feel about this evening's training, this evening's YouTube live? Anybody say, hey, I want to be in your free Telegram chat? Like I said, I do live recorded Zoom calls 5 to 6 times a week. Like I'm trading live with each and every one of you, whoever decides to hop on. The thing about it is I put out a weekly schedule every either on a Saturday or a Sunday. I put out a weekly schedule where you're able to see the times I'm going to go live and trade, where you'll be able to ask questions and things of that nature as well. All right, cool, Willie. So here's the deal. I don't know if you'll be able to see it on this particular video while I'm currently live right now, but what you can do once this video is finished uploading to my YouTube live, in the description box, you're going to see 4 links. The first link is to the leading U.S. regulated broker that I use to trade on, okay, where I place my trades on that platform, which is called Sway Charts. So let me show you. Let me show you Sway Charts. Sway Charts has a built-in trading journal, and you could draw on it as well. Since I've been drawing on TradingView, I just prefer to put my illustrations on TradingView. It's just a preference of mine. So what I'm going to do is slide. I have a 19-inch TV right here that I slide my stuff over on. So right here, I'm going to slide and show you all right here. Now you all can see my, this is Sway Charts. Okay, this is Sway Charts. Like I told you, you see I'm currently actively in a buy right there. I'm currently actively in a buy. Obviously, I'm getting hit for the swap fee. I'm okay and I'm cool with that. Okay, but this is Sway Charts. Okay, you got the trading dashboard. You got the trading journal, where they're going to show you the opening and closing of your trades. Trading dashboard is going to show you your total net profit and loss, your return, your average winning trade hours, average daily net profit and loss. And it's going to show the day: Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. Okay. All right. So, oh, you was able to do it, Ellie. That's what's up. Wonderful, wonderful, wonderful. All right. So this is the platform that I trade off of. All right, where I place my trades at. All right. So, uh, anybody else? Also, there's two Telegram links. There's a link to the community chat. It says trading community, and the second link right below that says trading signals. Okay, where I'll put out the signals and say, hey, possible buy on gold, possible buy on Bitcoin, possible sell on this, possible buy on that. All of these are possibles, but I'm waiting on confirmations. I will throw out the signal to put you on alert. Hey, this is what I'm looking at, but we're waiting patiently for what? Confirmations. Okay, waiting patiently for confirmations. I'm always going to say possible until I actually throw out the signal and say, hey, buy market execution or sell market execution this trade. And then I'll give out at least 2 to 3 different take profits, because you got some people that are scalpers, you got some people that are intraday traders, you got some people that are swing traders or position traders. So I throw out 2 to 3 different take profits, and I give you a stop loss. Now, normally my stop losses are like this versus being way wide like this. Why I got to be in so much drawdown, you know? So you live to trade another day. All right. Any questions, problems, or concerns before I conclude this YouTube live? Any questions, problems, or concerns you have for me? Any questions, problems, or concerns? See what Bitcoin doing. I was marking this up on my phone. So right now, it came off of a. Okay, this is an area of interest where the sellers can come in at. This is an area of interest where the sellers can come in and revisit this market on Bitcoin. See, the market has came off of what? The market has came off of this level. They got a low. The market smacked the supply zone right here. The supply zone did not lead to break this old low. The demand zone stopped it. Boom, broke this structure. Came high, came back, smacked this demand zone, broke this structure, came high. Sellers stopped it. Boom, this low right here. We're supposed to break this high and create a new one. Stopped at a supply zone, broke structure below. So guess what? Now this is the area of interest where the sellers can look to take over. So what I'll be looking for is possible sales from this supply zone on Bitcoin. And where could it go? It could possibly go down here to this low, to this wick that was created. Because this is a divergence and change of character. Look at it. And that's it. Look. Slanting lower, slanting up. Boom. Change of character. I'm telling you, when you develop that trader's eye, you develop that trader's eye. Okay? Any questions, problems, or concerns before I conclude this call? All right. I appreciate, as always, each and every one of you for taking time out of your busy schedule, to listen to what I have to say. It has always been greatly appreciated, and I will never ever take it for granted. Have a safe, blessed, productive rest of your Super Saturday evening. Know that I love you, and as always, I like to say, God created us on purpose to fulfill a purpose. So, what purpose are you willing to fulfill? And as I always say, don't be one of many. Be the one. Don't be one of many. Be the one. I love you all to life. Y'all take care. If you know any other friends, family members, companions that want to trade, learn how to trade, I feel free to take them under the wing and trade them for free. I believe in being a chill forgiver as God would want us to be. Okay? So I will see you all. The next time I'll be live is on a Zoom, and it will be at 4:30 a.m. Central Standard Time, 5:30 a.m. Eastern Standard Time, 2:30 a.m. Pacific Standard Time, and that would be on Zoom. Okay, and I post the Zoom link every single time that I'm live, so you don't have to go searching for the Zoom link. I will post it the instant that I'll be coming in my office and coming live. Okay, so you won't miss out on it. You don't have to go searching for it. All right. All right. Love y'all to life. Y'all take care. This YouTube live is going to be available once it's finished up converting. All right. Take care.